Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar fund analyst Muna Abu Habsa. Hi Muna.
Hello Emma.
So it's our emerging market week this week, but we'd like to caveat that because we'd like to say to investors, you can't look at emerging markets in isolation. You should look at them as part of a broader portfolio, and if you're not perhaps comfortable doing emerging market allocation yourself, leave it to a global equity fund manager. And so today we're going to talk about global equity income funds for those people who are looking for income or indeed looking for growth. They can always take the accumulation stocks. What we'd like to start by saying, though, is there are so many global equity income funds out there that you should really think about what you need, what you're looking for, what your risk profile is before you make a decision, shouldn't you?
That's right. Well, global equity income fund managers benefit from having a wide opportunity set from which to select stocks, and some are more adventurous than others and will delve into emerging markets to a greater extent than others. But these types of funds also come with greater performance variability and so may not be suitable for all income-seeking investors. For those that can tolerate some bumpiness, however, we do have three that we rate positively, and we can talk about those today.
And talking about that volatility, perhaps that's why these sorts of funds lend themselves better to people who have a longer term investment horizon, because emerging markets, it will be a bumpy ride, but a long-term approach is best.
That's right. So those funds, all three funds, have excellent long-term track records. In the short term, however, there has been a greater performance volatility relative to their peers.
So perhaps we'll hear what the first fund is today then.
So the first fund is Lazard Global Equity Income. This is a three-man New York-based team led by Patrick Ryan. The managers have been involved with the strategy since 2005, and like most income or equity income fund managers, they emphasize the stability of the dividends, but they also prefer companies with access to growing markets. And so the way they reflect this in the portfolio, they do this through a number of small positions in high beta emerging market names, carefully balanced by heavy stakes and dividend aristocrats.
And what's the second fund today?
The second fund is Newton Global Income. James Harris has run the fund since its launch in 2005. He's built an excellent track record. Overall, the emerging market names have helped the fund's performance, but also its ability to generate an above-average yield. There has been years, however, such as in 2013, where those names have been a key detractor from returns. What's important to note on this fund actually is the emerging market bias is not structural. So at the moment, it's around 2% of the fund. So that's down from its 20% peak in 2007. So it changes.
Having that flexibility will, of course, benefit investors, won't it?
Absolutely. He's a pragmatic manager. So yes.
And what's the third and final fund?
The third fund is Artemis Global Income. So that launched more recently in 2010, and it's been managed since by manager Jakob de Tuschlek. This is a well-differentiated portfolio from its peers because the manager is very mindful of the correlations and concentrations that exist within the equity income universe. And so he avoids the obvious names in the global and UK equity income investment universe, and he instead ventures into names lower down the market cap scale and emerging market names.
I have to admit a bit of a bias with this fund because I actually hold it in my SIP. After meeting with Jakob, he really impressed me by showing me a graph of other global equity income funds and how concentrated, as you say, that they were in US names and UK European names and actually weren't that globally diversified compared to his fund, which, as you say, is very strategic. You know, he only has a certain amount in US emerging markets across the different regions, making sure that investors really do benefit from global income.
Yes, well, if you look at the top 10 holdings in the fund, there'll be very few names that you recognise there that you see in other prominent equity income portfolios.
Muna, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.